Okay, welcome everybody to the Fireside chat that Jean, Clohessy and I are going to have. My name's Andy Virgo. I am the Director of BuytoLet within LendInvest. And as such, I've got with me this morning Jean Clohessy, who's the Director of Underwriting. We're going to hit on some industry topics, some LendInvest specifics, some opinions, some advice, and try and have some fun in this next 45 minutes. Type your questions into the question box and we'll get to them at the end. If we don't get to all of them, as Sophie said, we will get back to you privately afterwards. So welcome, Jean. It's a pleasure to have your company today. I think we've lost all concept of time this last year. What we've locked down, 1, 2, 3. How long have you been with LendInvest now?
Hi, Andy. I have been with LendInvest for just over a year. Well, a year and 4 months to be exact.
Well, it's like an underwriter to be exact, isn't it?
Exactly.
In a nutshell, perhaps you could outline your role for me.
So I'm a director of underwriting, and I look after the underwriters in both the BuytoLet side and the bridge side, which covers reviewing policy, training, and developing the team. Fantastic.
And what a team too, I might say. I mean, you know, during that time, there've been many changes to our BuytoLet proposition. I think when you joined, we were what, on lending policy 1. Where are we up to now?
Well, it might have felt like we were on lending policy 1, but we were actually on lending policy 3 when I joined. We're currently working off lending policy 5, while in the background I'm writing lending policy 6. So it just shows how many changes I've made in a short period of time.
Well, I know you've been busy and things have evolved tremendously over the last year and 4 months. Let's say accelerated over the last year and 4 months. It's certainly been fantastic having you on board. It's been a busy year or so. I mean, there have been many changes. What, if any, could you kind of like name as your top changes? We've evolved as a lender. What are your top changes you've made?
So since I've started, I've made about 200 changes, but that's been both in credit and operational. So I think I'll just list off a few of the key ones that I think from a broker's point of view that they'd be interested in, which was introducing the appetite statement. Again, just to make it something easier and build that relationship with the customer. We reduced the portfolio checks for portfolio landlords. So now we're only asking for 5 mortgage histories, whereas previously we were asking for 10. So a lot less paperwork these days. We have introduced our day 1 remortgages. And again, that is perfect for the customer clientele that we're getting in who want to take out equity in their projects. We've also widened up the scope of acceptable securities. Again, learning from the experience now being 3 years old, we've taken a few more risks on that. And then there's also been a lot of processing and operational changes to make things go quicker and streamline that process.
Those day 1 remortgages, I mean, that's fantastic. It's proven to be very popular where people are buying property, adding value, significant value to the property in a short space of time, and then being able to use open market value to be able to leverage up and then go again. It's fantastic product, fantastic proposition, and something that I know for a fact brokers are pretty chuffed with. I mean, you're always emailing me at the weekend. You're probably one of the hardest working people within LendInvest, the amount of hours you put in. What do you enjoy about your job?
As my boss is on this call, I'm going to say working with my boss. No, but in fairness, it's a team effort. I do enjoy the role. I enjoy getting involved with changes, making policy changes, product changes, training the team, helping them evolve. And looking at problem solving, because again, what we do isn't straightforward and vanilla products. So it's all about that entire process.
And how about working from home? I mean, as Rod alluded to in his opening this morning, I mean, we've been at home now since the 23rd of March, which has been easier for some than others. I mean, as a business working remotely for nearly a year now, we've been delivering. I mean, but how does that impact your team and their ability to carry out their jobs?
Again, the way Rod said it was, you know, as a fintech company, it's been quite easy for us to make the change. And we've settled at home very quickly. Again, March was one of our busiest months last year. And nothing has really changed. What we wanted to do, though, is make sure that the team didn't lose that morale. So we do kind of stand-up meetings all the time just to keep the team engaged, talk through different bits and pieces. Again, most of the time when you're in the office, you can hear situations or problems that arise, and you don't have that working from home. So we do have those catch-ups kind of twice a day and making sure that the teams are engaged. But I feel like we're a lot more productive from home because we don't actually have to do the commute, which is great. We can start working straight away. And Andy, I've seen that you've actually been posting quite a bit on LinkedIn. How are you faring?
Yeah, LinkedIn, I think, was my savior. I mean, you know, working from home for me is the first. I've always worked from home, but that has mainly involved going out and about. I've never been in a role in all my years in employment where I've even when I was a broker, I've never had to work from home in one place. I've never been in one place for as long as I have now. And I think last year was a struggle getting used to that. And I turned to LinkedIn, I turned to my video messages, you know, trying to post some things out there to help motivate people, help share what I've learned. And, you know, mental health is something that has got its place, even in a fireside chat like this about product and evolving our business. You know, mental health is something that we should be discussing all over the place. And for me, being able to share how I was feeling in those LinkedIn video blogs, or vlogs as the kids call them these days, was great. I learned some things from myself, which is fantastic. But back to what we're talking about. I mean, we're super busy. We're seeing lots of valuations coming in each day. The valuers obviously, and unfortunately, are slightly behind in their work, which is delaying things for all concerned. At this time of year, that's a real pain in the neck. You know, although we're slightly behind, we can work with that. What sort of trends are you seeing in terms of the valuations that are coming in?
So if we look at kind of the pre-COVID figures, the property values for remortgages versus what the customers anticipated viewpoint of the market value was kind of down at about 4.71%, and the customers' predictions on purchases were up at about 2.49 post-COVID, or in COVID, because we're not out of it yet. We've seen a reduction in the remortgages down from the customer's anticipation, about 10.49%, with purchases also down at about 3.72%. So there's a slight variation there.
That's some interesting stats there. And, you know, so it's remortgages down nearly 10.5% based on expectations. Purchases are coming in about 3.75% down, which is obviously tracking closer to what vendors are looking for. Any thoughts on how values are going to pan out post the 31st of March, post that stamp duty holiday finishing?
I think that there will be a dip, but I don't see it as a significant dip. And again, it's something that we're watching very closely in relation to the stats that are coming in from our valuation reports and also listening to the market.
Brilliant. I see similar. But bringing things up to date with that stamp duty deadline looming, do you think we've hit that deadline yet for no more purchase applications?
No, we don't have an official deadline date, but I do think that brokers need to be realistic in relation to timescales. Obviously, the valuations that need to happen and the delays that are currently happening on that front, with people isolating mostly. But we're not going to overpromise. We need the information all packaged as much as possible, but we are able to hit those deadlines if we have all the right information.
I know your team's focusing heavily on chasing outstanding information, getting solicitors in funds. That's something that brokers need to be on top of. Own your pipeline. That's the message. I mean, we've got some positive news though on the solicitors front, haven't we?
We do indeed. Thanks to Lauren Eaton's help, we have added blacks recently to our panel. A few months ago, we added Burkitt's, so that adds to our normal panel of solicitors who are JMW, Lightfoots, and Brody's, who cover Scotland. Again, we're open for business and we can take on the deals.
Yeah, it would be fantastic if we keep receiving purchase applications right up to the last minute, and those added solicitors, dual representation. Fingers crossed, we're going to make some vendors happy and some purchasers happy as well. Let's get into some criteria. Let's get into the nitty gritty. I mean, we use investment valuations for large HMOs. I get a lot of questions as to why we don't use investment valuations for small HMOs. Can you explain?
Yes, so we look at what's the easiest way to sell a property, and we don't want to overinflate the property value for a HMO, and then right next door is a single dwelling house. So we don't work off, we use bricks and mortar value. We don't work off a yield-based approach on that, and that is just because it's so easy to get the change of use for that, and we don't want to lend off an inflated value.
Okay. So let's maybe mix this up a little bit. Do you have any questions for me, perhaps?
Sure, I do, of course. Maybe for the audience, do you want to explain what you do for LendInvest?
Reveal the secrets. BuytoLet product lead. So I'm focused purely on designing, implementing product change for the good of the business, from a risk point of view, for the good of the brokers and borrowers alike. I spend my time researching the market, getting feedback from brokers. It's always important that we listen to those that deal with the customers daily and understand what it is they're finding out customers want in the form of product. And then make sure that it's all presented accurately in sourcing systems, making sure we're on top of the sourcing systems, positioned correctly, and criteria is up to date in the criteria hubs, the knowledge banks of this world. And I do a lot of BuytoLet presentations, events like this, and for brokers and networks and clubs. So busy with all things BuytoLet.
And what trends do you see ahead for BuytoLet in 2021?
I think we're going to see a continuing monitoring the market, looking at our peers, making sure that we're positioned properly. The aim for us as LendInvest is to be the best BuytoLet lender every year. You know, we've been lucky to win the last 2 years the NACFB BuytoLet Lender of the Year, and we'd love to do that in a third year running. But we want to be known for not only having great products, but also providing great service, being innovative. I think this year, obviously, there's the move away from LIBOR to the Bank of England base rate. So that's going to, you're going to hear some announcements on that very, very shortly. That's going to allow us to do some more from product point of view. There's going to be landlord opportunities, purchasing property that perhaps didn't sell when the stamp duty finishes. There's going to still be some good stock out there for landlords that have been building up a bit of a war chest, a hunting fund on their remortgages to go out and buy property at the right price. And of course, 2016, 5 years ago, we had that March the 31st deadline for that extra 3% stamp duty levy coming in. So it's remortgage central at the moment. We're seeing all sorts of remortgage business coming in, and that's where the biggest opportunity lies for brokers at the moment, remortgaging those 5-year fixes that were done as they came up to the 2016 stamp duty deadline.
And one of the tools that you use in sales is sourcing systems. How are we performing?
Yeah, so we're well represented on the sourcing systems. 27 Tech, Trigold, Mortgage Brain. We access them all, and it's very important that when designing a product that we look at our pricing to ensure we do on that first page. But times have changed. I think going back a year or so ago, a lot of people used to look for the best rate. Now it's a combination of rate and service. There's no point, and we've seen this, having really, really low interest rates and getting snowed with applications. So service falls through the floor, you can't deliver, and your client misses the deadline to purchase or remortgage property. So from that point of view, our positioning on sourcing systems is going to be is key to our success. It's going to be making sure we have a combination of price, offers, cash back, valuation fees at £150, open banking incentives, but also, we anticipate people choosing us also on service and criteria as well. I mean, on systems, all things tech, we're a fintech business. Rod said this morning, of our 185 people in the business, we've got a third of those people kind of in the tech side of the business, developing for the future. What do your team have at their fingertips to help them in their role, Jean?
We have loads, but kind of the main ones that we use, we've just recently integrated with Equifax, which has been quite a substantial project, but also so time saving for our underwriters and case managers. We use Quest for the valuations, Rightmove, DocuSign, Jumio. We just have a huge variety of different tech tools. And
I know there's a roadmap for IT. We're very proud of our IT roadmap. What's coming down the road for you in the near future?
We actually have a lot of great things coming up, which will increase the speed of processing and getting those offers out as quickly as we can. We're looking at trying to integrate our underwriter-centric technology, and we're going to be looking at further integrations with open banking, land reg, etc. Again, it's all about that speed to offer and then speed to completion.
Excellent. Right. I'm going to put you on the spot here, Jean. We're going to mix things up a little bit. We're going to grow our proposition this year. There's some property types that we lend on, we don't lend on. So I'm going to really put you in the spotlight here. You can answer either yes, no, or maybe. So here we go. Are we going to start seeing us lending on holiday lets?
Maybe.
Maybe.
Yeah.
Okay. How about expats?
As an expat myself, no. Yeah, at the moment, it's not something for 2021, I don't believe.
Okay. How about commercial, semi-commercial properties?
At the moment, I would say no to both those types.
Okay. What about basement flats? I know basement flats are a contentious issue at times.
Yeah, I feel like there will be, we'll be doing potentially more in that area. So yes.
Good. What about the first-time landlords that we look after at the moment? So when will we be able to move to 75% loan to value for first-time landlords?
Yes, we're definitely looking into that at the moment.
Ah, nice one. With day one remortgage. Let's underline that one. I want to just nail this. Day one remortgage at open market value.
Yes, so we currently have that in our product set at the moment. And I guess the caveat on that is that it needs to make sense, that the customer has done some sort of work to it in order for us to lend off that enhanced value. But yes, we do that.
Right, let's go back to yes, no, or maybe, please.
Yeah.
HMOs, larger than 10 bedrooms. When are they coming back? Are they going to come?
Yes, they are coming back.
Okay, tough one this. We're going to finish on this one. Tough one this. Flats with cladding. You can go beyond yes, no, or maybe.
Okay, thank you. Yes, we do currently lend on flats with cladding, but it has to be within our appetite. Again, it's one of those controversial topics, I guess.
Yeah, mean, let's just explore that one a little bit further. I mean, flats with cladding. There's all sorts of things going on in government. It's a real hot topic. Let's go into a little bit more detail on that one. Where are we with flats on cladding?
So there's obviously ongoing meetings on this topic, which are led by the UKF, which we're fully involved in. We're centered on looking at that new guidance that are coming out from RICS valuers, and they will be published over the next couple of months. With the guidance, we're taking on that risk-based approach in relation to kind of the property types and where we require an EWS1 form. The valuers are also providing a lot of information in relation to that. So it's one of those evolving topics that we're constantly reviewing and constantly in meetings about, and making sure that our proposition is the right one, not only for us, but also for the market. On the subject of change in 2021, the LIBOR deadline is hitting soon. How does that impact us?
Yes, yeah, I'm very much looking forward to opportunities come our way because we will be moving away from LIBOR. I kind of referred to a little bit earlier. We're moving LIBOR across the Bank of England base rate. That decision has been made, so that's going to allow us to launch some new products, which is very, very exciting. So watch this space. There's been an announcement going to be made on that next month. And we'll see that transition happen soon. So definitely watch this space. Right, we're coming up to the Q&A time, but let's just do this one last thing. We've got to now provide, Jean, one tip for brokers and one prediction for the industry for 2021. What are yours?
Tip to brokers: use LendInvest. We're definitely going places. We're 3 years in. We've done 2 securitizations, 2 best lender awards. We're heading towards $1 billion in BuytoLet asset lending. And I believe that we're offering one of the best service propositions in the market, supported by an excellent team who love what we do and always look at improving that. And my prediction for the industry would be that the buy-to-let market will stay strong and will be very active for the year.
Okay. Right, I'm going to give you mine now.
Okay.
I think tip for brokers: there's never been a more important time to stay close to your clients. Find out what their buying plans are. There's lots of opportunity ahead in 2021. We can talk the industry down and it'll happen. Self-fulfilling prophecy. Let's talk the industry up. Let's make it happen for each other in 2021. Lots of opportunity. Stay close to your brokers, understand their plans. And if they're looking to if brokers are finding that their landlord clients are looking to make changes to their portfolios, grow their portfolios, remortgage their portfolios, come to us for an appetite statement. Find out the details from your BDM, but the appetite statements where we provide a commitment to how much we're prepared to lend someone is really key. We're going to obviously look at supporting those borrowers that perhaps have ended up in a slightly impaired credit position. We've got a wonderful tier 2 proposition for people like that. So keep an eye out for people who have some sort of impaired credit, because our tier 2 proposition is ripe for those. Predictions: going to be okay. We're going to talk the market up. We're going to survive this. Let's have a positive attitude. No self-fulfilling prophecies here. No talking. This industry. Lenders alike, clients alike, be kind, be compassionate to each other, be patient, and face up. Talk about mental health. You know, there's a place in life and industry to talk about mental health, and it's the right thing to do. And keep watching out for my LinkedIn videos on that point. Right, that's enough from us. Let's see. We've got some questions, Jean. I've got one question here. for you. This is one for you. I've had a case approved for something outside your criteria. That's great service, that is. Do you agree deals that are not mentioned in criteria guides?
Yes, we definitely look at case specific. If the deal makes sense, we will look at supporting the application. So I think it's always worth contacting your BDM in relation to those finer points or something that isn't mentioned or listed. In general, in the product guides themselves, we go quite general and give you the basic information of what we support, but there might be finer points where we don't go into that level of detail, and it is just about going to your BDM or picking up and calling the help desk in relation to those points.
Yeah, so if somebody believes in a deal, sell it to the BDM, give them the rationale, and we'll look outside the box. Fantastic. I've got another one here. Can you take an agreed broker fee and add this to BuytoLet? I'll take that one. Yeah, but no, but. So yeah, it's something that we want to do in the future. We have some limitations in terms of technology that we're building in the ability to be able to add a broker's fee on top of our loan. Can't do it yet, but it will come. Trust me. Watch this space. Another one here. Would you accept a rental market value that is higher than the rent on the AST? Would you accept a rental market value that is higher than the rent on the AST? Okay, so we lend on against market rent, obviously. So when somebody is renting a property below market rent, we will use market rent to work out serviceability. If a property is being rented for more than market rent, good on the landlord. That's not something that we would take into consideration when we work out serviceability. It's all about, if somebody's paying more for a property from a rental perspective than the market dictates, it's because they specifically want to live there. So please correct me if I'm wrong, Jean, but market rent is what we'll go with at all times.
Yeah, market rent is what we go off. We may question if there is an affordability issue in relation to that as the background. But from a serviceability point of view, it is market rent. Okay.
This is one for you. I think you're going to have to ask this one on behalf of Lauren, who's not here, who deals with this part. It's great you've added 2 more solicitors. Fantastic. Do you intend to add additional valuers, as they currently have a monopoly and can downvalue at will?
Interesting. The panel that we use, we obviously use Connell's and Method. Within that, there are always additional valuers that are looked at to be added to that panel under that umbrella. Unfortunately, the valuers were hit and hit by COVID, and a few of them are no longer trading or have just decided that it's not the time for them. Some have come out of retirement actually as well. So there are more people who've come on, but also dropped a few people. So yes, it's always under investigation, renewal, whatever way that you want to process that. But we constantly want to make sure that we have all areas and parts of the country covered. And making sure that we have the right valuers out there in order to get the valuations carried out as quickly as possible.
Okay, thank you for that one. So this one here is, do you intend to start first-time buyer, first-time landlord lending? Some clients live with their parents, they can afford a buy-to-let. So is that something that we would be interested in starting? That's first-time buyer, first-time landlord.
I think that's an interesting question. At the moment, obviously, we just do first-time landlord, and we want a customer to have their own resi for at least 6 months. I'm not saying that that's off the table, but right now we don't have a proposition for that. But it's definitely something that we will be constantly reviewing. I think also during COVID and lockdowns, people have managed to save a lot of money. So it's something that is on both myself and Andy, your radar in that proposition. But right now, we don't have a proposition for it.
Yeah, so just to share a secret, Don't tell anybody if you're listening. But basically, we have a BuytoLet subcommittee where we share all these ideas. We throw lots and lots of ideas at each other. It's myself, Jean, and capital markets team who organise the funding for LendInvest. So we share all these ideas. We thrash out. We argue. We look at the risk curve. We look at the market. None of these things are off the table. There's just a time and a place. It's all we're in a buy-to-let market, in an industry where it's quite tough to reinvent the wheel. We're doing reinvent the wheel. We're trying to do as much as we can from a technology perspective, but from a risk curve, it's really about the right time and the right place. Question here: can you explain the process of valuation for a property portfolio purchase, please? Do you value them on purchase price or market value? Do you want to take that one, or shall I?
I'm happy to take it. We work off the lower of the two, so it doesn't really give you a clear answer. What we're looking at is not overlending. So if the purchase price, again, normally it would be in a portfolio purchase, is lower than the market value, we will lend against that. And that's kind of how we set up our deal submission. Each deal is on its separate application. We don't have a portfolio product, so each application is on its own merits, and it has to meet our criteria on that specific product or property type.
Excellent. One here: we do most of our business in Scotland. Scotland. So great news on Scotland. Do you want to highlight what we've just done in Scotland from a solicitor's point of view? Are you on my train of thought?
You can run with it.
So in Scotland, we had a bit of an Achilles heel where we kind of insisted on the Scottish equivalent of what we in England call a debenture. So when it came to SPV lending, we were hamstrung that we were asking for debentures for Scottish-based SPVs. That we've reversed that decision. It's something that we will only ever do in extreme circumstances. So there's absolutely no reason why we shouldn't be Scotland's first choice of lender.
And also, when we get to a certain aggregate loan size, we will start implementing it. But on the general day-to-day cases, we don't have that anymore.
Well, the second half of this question, because I've now split it into two, this is definitely for you, Jean. Okay. So as such, some of the individual property values are below the minimum of 75,000. However, in a portfolio, the total borrowing could be significant, taken as a total lend. Can we consider these deals?
At the moment, no. It is something that we can relook at those values of properties. And again, we've seen it not only in Scotland, but some places up north that maybe that 75 is potentially a bit higher. And I understand in relation to a portfolio, if you look at it as a total package rather than that isolated deal. In relation to how we fund, each deal is on its own separate merit. And that's why we have that rule in place. We don't have, as I said, we don't have a portfolio product where we can have multiple securities on one deal. And therefore, at the moment, we're only accepting that minimum value.
Okay. One about our technology. It's great that you use DocuSign. Thank you for recognizing that. I have had reports of people signing their mortgage offer in the supermarket while shopping. Believe me, that's true. It helps speed up the process for us brokers and our clients. Yep. With your plans for now and in the future with technology development, what do you think will be most helpful future features technology-wise? I'll start this one off and then you can perhaps pick up if I miss anything. So from a technology point of view, we've got a degree of catching up to do. So from a decision in principle point of view, we really are looking forward to being able to introduce credit-backed DIPs, which will save everyone a lot of time and hassle for getting the right application on the right product in. With regards to DocuSign, we do use DocuSign. That's working very well. We use on Fido when it comes to proof of identification. We're currently reviewing our relationship with OnFido to make sure that that is the right product, the right piece of software. Is there something more simple that people can get right every time? What else is there? DocuSign. Anything, Jane, from a technology perspective?
I think what we're trying to achieve is make everything easy, one kind of click, one touch, and we've seen a huge improvement in our open banking uptake. And again, that's with the change of technology that we're using and our provider. They're now sending messages, text messages instead of emails. Emails do get lost. So again, it's utilizing what our customer is looking for, and that ease, touch. Everybody carries their phone around, so if you get a text message in, it's probably easier instead of being lost in your emails. So there's a lot. Again, that credit back dip, we're working heavily on that at the moment. So that there is a lot that we're working on in relation to making it easy, but understanding what the customers actually want and what they need.
We've got one final question. This is the last one, so hopefully we're going to end on a high. He says, any plans on improving bridge to let products to one application for short and long-term lending? That's the first part of this, and it says 1 val fee, 2 offers, just like our competitors. Thank you for that question. I'll be honest, when we started our journey as a bridging lender, we started that journey on one operating system. When we moved to BuytoLet, we bought in another operating system for BuytoLet. So it's about merging those 2 operating systems together, which is a project that we are currently involved in. From that perspective, and I'm used to in previous role with another company, we're very much looking forward to being able to provide one offer for a bridge and the exit. But from our current proposition, Jean, you see it work quite well across our bridge to let proposition?
Yeah, I mean, I think, again, looking after both teams makes it easier to potentially consider that smoother process and make sure that the underwrite is kind of done. But definitely, it's something that we're constantly reviewing, and it's probably number 2 on my list of most important things that I'm currently working on. We're very aware that we want to make that transition as smooth as possible, even if internally we have to do other things. The external communication and how it's perceived is most important.
Brilliant. Well, look, Jean, thank you for your time, your contribution. It's fantastic that you've been able to share some of the secrets of LendInvest, where we're going, what we're doing. I hope everybody watching has enjoyed that, and we wish you all the best for 2021. Keep in touch with us. We are your lender of first choice. Do not forget that. Enjoy the rest of the day, and good luck.
Thanks, Andy.